Hello, chart watchers and Decision Point faithful. Welcome to this special edition of the Decision Point Show. My name is Erin Swenlin from DecisionPoint.com, a co-founder and vice president. And today I'm going to talk to you about our exclusive Golden Cross and Silver Cross indexes. These are brand new market indicators that we came up with, well, that Carl came up with earlier in the year of 2020. And we've been finding it to be, both of these indexes to be extraordinarily helpful in determining overbought conditions and participation, among other things. So I wanted to share with you how we use the Golden Cross and Silver Cross, what they are. But I do need to give you the definition of an index indicator. And I need to talk to you about, of course, the Golden Cross and the Silver Cross. So before I get into much else, I just wanted to give you a quick definition of an index indicator. We have market indicators that we put on our stocks, right? We have our MACD or our PMO and an RSI. Those are all giving us indicators on that particular stock or ETF. An index indicator requires an index because what you're doing is you're taking the, let me think the best way to say this. You're taking the results of one indicator, for example, across the whole index. I'm going to show you this. It'll be a little more obvious once we go ahead and look at a few stock charts. So let's get right to it. All right, so here are our golden and silver cross indexes. I'm just going to pull up the one for the S&P for the SPY so that I can explain this a little more clearly for you. All right, so the BPI is considered an index, a market index indicator, because it takes all of the components of the S&P 500 and determines if they are on a point and figure buy signal. So we're basically taking that group of indicator values, and then we're taking that across the whole index. So we can see that when we're looking at this BPI, percent, the bullish percent index, how many have a point and figure buy signal? Well, right now, 67.4% of the S&P 500 has a point and figure buy signal. So that is an index indicator. You can't put this on a stock. You can't put this against an ETF, because it's really telling you something that's going on across all of the members of a particular index. So that's the two differences. I many times will be asked, especially after we presented these new indicators, how can I add this to my stock chart? How can I add this to the ETF? And you can't because it is an index indicator and it requires an entire index to make it work. So what is the golden and the silver cross? So I think most people are familiar with a golden cross. Right down here, we're looking at, this is the golden cross right here. A golden cross we identify as a 50-day moving average moving above a 200-day moving average, whether it be a simple moving average or an exponential moving average, doesn't matter. So what we're checking with our Golden Cross index is how many of the stocks within the S&P 500 have golden crosses or a 50-day EMA above the 200-day EMA. So for example, we're looking up here at the at the SPY, and there's the 50-day in purple, and of course the blue the blue is the 200-day EMA. So on any of the stocks within the S&P 500, if they have their 50 above their 200, then that goes toward a Golden Cross component of this index. So right now, on February 8th, when this last reading happened, we had 90.6% of all of the index of the S&P 500 with 50-day EMAs above their 200-day EMAs. For DecisionPoint, this also has another meaning. The Golden Cross also gives us a long-term trend model buy signal. So when the 50-day EMA gets above the 200, has a golden cross, the decision point long-term trend model goes into a buy signal. So that's one of the main reasons we came up with this index, is because it tells us how many, what is the percentage of those within the S&P 500 that have a long-term trend model buy signal. So that gives you kind of the step-by-step getting into the golden cross and what it is measuring. So now let's talk about the silver cross, because that is probably a new term, because that was a term that Carl has coined for the intermediate term trend model buy signals. So an intermediate term trend model buy signal is when the 20-day EMA crosses above the 50-day EMA. That's what we consider a silver cross. And that means that when you get that 20 and 50-day positive crossover, that gives you an intermediate term trend model buy signal. So the silver cross helps us identify the percentage within the S&P 500 that have their 20 above their 50-day EMAs. And in this case, on February 8th, we had 78.8% of the S&P 500 on intermediate term trend model buy signals. So market index indicator, taking a bunch of figures from an index for each component, whatever that indicator is, and counting it up across the index, and that will give you your index indicator. So what do we use the golden and silver cross for? Well, it tells us a lot of information, right? It tells us the strength, the internal strength of what's going on within that index. So at this point, we know that we have lots of strength in the long term, because over 90% of the S&P 500 has their 50-day EMA above their 200-day EMA. So that's some really great long-term foundation. We can see that on the silver cross, it is flattening out right now, but we were getting that turn moving up on the silver cross, and that told us that in the intermediate term, we were starting to get internal strength. Now, the other thing we use these indicators for is overbought and oversold, obviously, and looking for divergences. I think the golden and silver cross have been pretty good with showing us negative divergences before a big decline. For example, right before the bear market decline, you can see there's the right there, negative divergences on both the silver and golden cross that came in before the big bear market decline. You can look back here between the summer when we had rising tops up here, but you can see declining tops on the silver cross, and you can see declining tops on the BPI. Difference is the golden cross. No negative divergence before that decline, because we were building the foundation that would eventually hold up the longer term rally that has taken us to new all-time highs. So it's an extraordinarily useful indicator, both of these. And we like to pair it on our charts with the BPI. I talked about the bullish percent index. Again, tells you how many of the components within the S&P 500 are on point and figure buy signals. These other two are really great for giving us a short and an intermediate term picture of the health of a particular index. This is a breadth type indicator. So what we do is we check the percent of stocks that currently have their price above their 20-day EMA. So this tells us, again, participation is what we get from this one, right? Right now, there are 79, almost 80% of the stocks within the S&P 500 that have their price above the 20-day EMA. And of course, that's really the short-term price support that you want to see your stocks holding. You don't really want to be in a stock when it loses the support of its 20-day EMA. And certainly you don't want to lose it if it's below the 50-day EMA. And that brings us to the last one right here. This one tells us how many stocks within the S&P have a price above their 50. So right now you can see with both of these, we have about 80% of the stocks above their 20 and 50-day EMAs. That's good to support a rally. You need to have that kind of foundation. What becomes the problem, of course, is when we get into overbought territory. You can see that right now the golden cross is extraordinarily overbought. We have been calculating, we did back calculate this particular indicator. We have back data on it, and we know that this is one of the higher readings we've seen. You can tell it's much higher than even what we had after that extended bull market of 2019. So we're looking at even more overbought extremes on the golden cross right now, and that does make us concerned at this point. But as you can see, as far as the golden cross indicator, if you look here in the thumbnail up top, you can see rising tops on price. And when we go down here and look at the golden cross, we also have rising tops. And so that is confirming in the longer term this particular rally. The issue, of course, is we started this really nice move to the upside. We made new all-time highs, but what was going on with the silver cross? It was in a negative divergence, and it still really is in a negative divergence as we continue to make new all-time highs. So far this morning, we haven't, but we have this negative divergence in the shorter term as we're looking at this silver cross in the intermediate term mainly. And so we're seeing that negative divergence, and that, of course, is a problem for us. We can also see on the BPI, there's a negative divergence as well. Now, I do want to point out the fact that we look for tops, right? We want declining tops. Well, in this case, we have the negative divergence, right, with this BPI. We don't have a top over here. So currently there's a negative divergence, but should the BPI get above those previous tops before it tops, then that will negate that negative divergence. But currently we still have it, and that is a concern. When you're making new all-time highs, you want to see new all-time highs on some of these, or new highs on many of these indicators. So now we know the power of the golden cross and silver cross. So let's go ahead and take a peek at all of the indexes and sectors that we do have available on the golden and silver cross. So I'm going to take us over here. Now, this particular chart list is available. I'll show you how to get these chart lists and many of the other ones that we do have with DecisionPoint. But I wanted to point out that we don't do the golden cross and silver cross just for the S&P 500. We also do it for the mid caps, the small caps, NASDAQ. You can see all of these. And then in addition, all of the major sectors. And then we've included gold miners because that's a favorite of many. So we came up with, we calculated the golden and silver cross for gold miners as well. So when we go through these, you can see how the golden and silver cross do give us the kind of information we want to see. So let's go ahead and look at a few of these golden and silver cross index charts. Now we looked at the S&P 500. Let's go ahead and take a peek at the S&P 600. Get here to a summary. There we go. And here are our small caps. So we can see with the small caps, the silver cross is very overbought. Now we didn't see that on the S&P 500. We can also see quite a negative divergence going on here for the small caps, making new all-time highs. We did see the positive crossover, so that looks healthy, but overall we're still in a negative divergence with price. The BPI, the golden cross, I'm sorry, is currently confirming in the longer term this particular rally. And it's telling us that, again, there's a solid foundation when you have this many components within the S&P 600, 91%, with their 50 above their 200. So With Decision Point, whenever the 50-day EMA is above the 200-day EMA, we consider that giving the chart a bullish bias. And when the 50 is below the 200, we consider that giving us a bearish bias to your chart. So when we have 91% with a bullish bias, that's, again, a really great foundation to support rallies. The issue becomes when they get very, very overbought, because that's when you start looking for that market reversal. And we are at a reading for the S&P 600. I haven't gone back to look further back before 2018, but we can see just in the past 3 years that this is an extraordinarily high overbought reading. Now, let's go ahead and look at, I have an excellent chart to show you. And this is the golden and silver cross that goes across all of our indexes that we follow here. So this is the broad market golden cross index. And you can see that we've got the price for S&P 500 on the top, and then we have the golden cross on the bottom, along with all of the golden cross for the NASDAQ and a golden cross for the NYSE. So here's your golden cross for the 500. There's your price for NASDAQ Composite. And here is the golden cross, et cetera, et cetera. And again, what we're looking at right now is highly overbought readings. Now, what I find interesting and what I love to do when I go through these type of index charts is to see which, where the strength may be lying, or where are we looking at extraordinarily overbought readings. Well, what's interesting to me when I look at this chart is that the NASDAQ has only 74% on a golden cross. NASDAQ typically has your stronger technology stocks. We've been seeing a lot of strength in the NASDAQ, particularly the NASDAQ 100. But yet, we don't have as overbought of a reading. We're only at 74% for the golden cross on the NASDAQ. However, 74% may seem like a not so overbought reading, but when we look at it over the past 2 years, that's a very, very high reading for the NASDAQ. Looking at the NYSE, we're seeing very similar action here, where you have new highs and you're seeing even higher readings on that golden cross. This is an overbought reading, not as overbought as the SPY right now, or the S&P's 500's golden cross, but you can see that it's certainly getting in that range. And then when you compare it to the indicator over the past 3 years, you can see that we are in very overbought conditions. Overbought conditions generally lead to market declines. We don't like to see these overbought conditions, certainly not now. Let's look at the one for the silver cross. Let's get an intermediate term picture and temperature for those same 3 indexes. Silver cross, 78% for the SPY, the S&P 500. Here is your NASDAQ making those new highs. And we can see on the silver cross, currently there is a negative divergence in that intermediate, short to intermediate term, as we see declining tops right now on the silver cross for the NASDAQ, and we see new highs on the NASDAQ Composite. Similarly, we're getting somewhat new highs here, new all-time highs on the NYSE. And we also are seeing that same negative divergence going on. We don't even have the positive crossover yet for the silver cross on the NYSE. But you can see that these particular readings are highly, highly overbought, and they do worry us as we consider the possibility of a market reversal. And I would have to say, as far as this taping, we have highly overbought conditions. We have valuations on stocks that are just ridiculous right now. There's a lot of speculation with Robinhood, small investors getting more involved, and adding the GameStop phenomena, etc. So we know that a lot of what's going on in the market, we are definitely due for a downturn. It's just a matter of when does that speculation turn into that market reversal, as people start to become more nervous, or things just get even more overbought. So right now we're not liking what's going on with that golden and silver cross. Certainly not a good situation there. So let's go ahead. I'm going to go back here and we're going to look at one of the sectors that is really grabbing my attention as of late is the materials sector. Currently today, it looks like it is down 0.35%, but this was a sector that I was starting to see some movement as far as the silver cross goes, and looking at the BPI as things start to turn around here for materials, and then look at the participation that's going on. Again, these are market indexes. We're measuring how many stocks within that particular sector index, in this case sector, how many of the material stocks have their price above the 20-day EMA. Currently, it's about 71, 72%. And then we have 3/4 of those material stocks with their prices above their 50-day EMA, and that is increasing. So we're starting to see increased participation. Next up, we want to start seeing this golden or the silver cross starting to give us that positive crossover. This is somewhat oversold territory if you're looking at it through the vision of this year, but we can see that this is not particularly oversold. We've certainly seen much lower readings, but I think it's encouraging that we're starting to see that turn for materials. And now we're waiting for that BPI to catch up. Here's that golden cross. Yes, highly, highly overbought reading, but we can also see that it is a strong, strong foundation to keep prices up or to push prices higher if you have that strong foundation. And right now we're starting to see that kind of movement with materials. Let's look at technology. This is, of course, one of our favorite sectors. And then I'm going to show you how to download these lists if you're interested in them. All right, so looking at the technology chart right now, again, making new highs, negative divergence on our silver cross. We have 84% of the technology sector that have 20-day EMAs above their 50s. We are looking at a BPI that currently is in a negative divergence right here. You can see from that previous cardinal top, and we are getting that decline, but it looks like we're trying to, get that, move that out of overbought territory. It looks like we're trying to make that move up and possibly negate that negative divergence. The golden cross, again, great foundation with 94% of the components of the technology sector on buy signals on 50, 200-day long-term trend model buy signals, so 94%. Again, a pretty good foundation. We just need to be careful because, again, these are very overbought readings. And then you can see the participation as more and more within that sector leap across their 20-day EMA to the upside and now getting back up above their 50-day EMAs as well. So we're seeing some pretty good price movement here in technology, but we do have these overbought readings and the negative divergences are still in play currently. All right, so if you're really interested in this particular golden and silver cross indexes chart list, and again, I'll do the summary here so you can see it. You can download these for free currently on StockCharts by getting the chart pack. Now, before I show you this, I do want you to understand that you do need to be an extra member or above in order to download these chart lists. Extra members can have more than one chart list, and you need to be able to have more than one chart list because these chart packs are chock full of charts and chart lists. So if you go over here to your account and you scroll down, you can see chart packs. And what you want to do is manage the chart packs. And then you will find all of the various chart packs that are available to you on StockCharts. And the top 4 here are the DecisionPoint chart packs. You would want the DecisionPoint Market Indicators chart pack. This is the one that has the golden and silver cross in it. It is new, so we don't show it here on the list, but it is there. And here are the instructions on how to install it and download it. Now, there are other chart packs here that you might be interested in. One of them would be the Trend and Condition Chart Pack. This is an excellent chart pack. We look in terms of, we don't go from indicator. You notice that last one, it showed us all those lists of indicators. That chart pack, you start with the indicator and you look at all of the different indexes and sectors, like we did with this, right? So we start with the indicator and then we want to look at it across all of these sectors and indexes. The Trend and Condition chart pack is almost the opposite. It takes the index and then shows you all of the indicators for the index. So you're kind of going the other way, the other direction. So if you're interested really just in seeing the indicators for the NASDAQ 100, that's where you would go and download this. There is one other addition into this Trend and Condition chart pack that, again, I need to get listed on here because we just added it. But I have been showing people the ETF tracker. And this is an exceptionally great chart list to have. Carl has compiled all of the major ETFs and industry groups with the ETF symbol. And what's fabulous about this is that at the end of the day, I have mine set up to give me a daily report. And so I can see which ETFs and industry groups finished in the top and which ones finished in the bottom. And it gives me a very good understanding of where the strength is currently in that market. So here's the summary version, but we know that we can organize it by percent change. So currently, as far as today, we're looking at rare earth and the Moonshot Innovators ETFs, solar and lithium. All of these areas are areas that we are definitely bullish on at this point. Solar and lithium, I think sky's the limit, and they have recently pulled back. So I think that that's a pretty good area to look at. But these ETF tracker, this particular chart list is fantastic. And as you can see, you can always go down and see the 1 month, which ones have been outperforming. You can sort it by the scooter, the StockCharts technical rank, and it gives you some excellent information. So let's go back once more to our golden and silver crosses chart list. And again, it's an excellent way to determine what is going on underneath the hood, if you will, on these particular sectors. I'm going to just quickly show you the gold miners, and then we're going to end the program for now, this special. But let's look at the gold miners. This is an area that everybody is almost always interested in. We have sort of this topping formation that we've been watching. Gold miners haven't been doing very much, but the silver cross, as you can see, very depressed, very oversold readings. It is flattening out, and we will be wanting to watch for the turn on this. Generally, the turn, you can see right here, gives us some pretty good information that we're going to see the index rise, the gold miners index. And we're seeing some information under the surface here that looks very, very nice. So in conclusion, let's come back here to our wrap up here for the golden and silver cross indexes. I gave you the definition of an index indicator. Remember, you can't put these index indicators on your actual charts for your stocks and ETFs because they are made up of so many others. And that pretty much closes this special edition of DecisionPoint Show. Hope you enjoyed it, and be sure and download those free chart packs that I showed you how to. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.